Okay, good day everyone. We're now going to discuss stock splits and reverse shares splits. As companies grow, their fair share market price usually increases. Sometimes it becomes too expensive or even unaffordable for common investor. In such situations, companies usually use a device known as stock split to lower the market price of their stock so that it becomes affordable and looks more appealing to a greater number of investors. When the market price of the shares is high and the corporation feels that a lower price will result in a wider distribution of ownership, it may authorize the replacement of outstanding shares by a larger number of shares. The increase in the number of shares outstanding in this manner is called share split or share split up. For instance, 10,000 ordinary shares with a par value of 10 pesos are replaced by 20,000 ordinary shares with a par value of 5 pesos. This type of transaction is described as a share split of 2 for 1. Two new shares are issued in exchange for one old share. The par value is subsequently reduced to 5 pesos. So it becomes 20,000 shares instead of 10,000 shares, but no longer 10 pesos ang par value. This time, 5 pesos na yung par value. There is no change in the total amount of the contributed capital, but the number of shares increased and the par value is reduced. The reverse procedure, that is the replacement of shares outstanding by a smaller number of shares with an increase in the par value, is called reverse share split or share split down. Kapag dumami yung number of shares outstanding, ang tawag doon ay share split. Pagka kumonte, reverse share split. Or if you want to use another name, you call the increase in outstanding shares as share split up. At kapag bumaba, share split down. O, yun yung magka-partner na term sa share split at saka reverse share split or share split up or share split down. Okay? This is desirable, yung split down is desirable when the market price of the shares is low and it is felt that assigning a higher price for the shares offer certain advantages. For instance, 10,000 ordinary shares with a par value of 10 pesos are replaced by 5,000 ordinary shares with a par value of 20. So yung 10,000 magiging 5,000 na lang. Pero this time, hindi na 10 pesos ang par value niya. Kung hindi, 20 pesos na. This type of transaction is described as share split of 1 for 2. One new share is issued in exchange for 2 old shares. So, kukonti yung old shares kasi instead na 2, magiging 1 na lang. The par value is subsequently increased to 20. Yung 10, i-multiply natin by 2 kasi na-reduce yung number ng outstanding shares, mag-double yung value ng shares of stock. A stock split does not require any journal entries in the accounting records as there has been no change in the total equity of the business. A memorandum entry is normally made to reflect the fact that the split has occurred and that the par value has changed proportionally. A share split is recorded by a memorandum entry. The entry should state the new number of shares, and the new par value of the shares. However, a journal entry instead of memo entry may still be prepared, canceling the old issue and recording the new issue. Using the previous example that we had where there is a share split of 2-for-1, 2 new for 1 old, the transaction may be recorded as follows. Ordinary share, capital 10 par, 100,000 debit. Di ba ang normal value niyan, ang normal entry, ang normal balance niyan ay credit. To erase that 10 peso par value share, we have to debit it. And then we credit the ordinary share capital by 5 pesos. Ito pala, sorry ha, this is 2 new for 1 old. 2 new, split of 2 new for 1 old. So, dadami yung outstanding shares, bababa yung par. So, buburahin natin yung old par niya, which is 10 pesos. At ilalagay natin yung bago niyang par, which is 5 pesos. So, magiging yung number of shares nito, magiging 20,000 instead na 10,000. Okay? It should be noted that the share split will not affect total shareholders' equity nor total share capital. It will simply change the number of shares outstanding and the par value share of stock. So, walang epekto sa contributed capital at sa total stockholders' equity. Ang purpose lang nito, marketing actually. Gusto mong ma-market ka agad yung shares of stock mo, or gusto mong gumanda yung itsura niya. You either decide on a split up or a split down. Kung gusto mong ma-afford ng mga medyo mahihirap na tao yung yung share, yung presyo ng share, mag-split up ka. Damihan mo yung shares at babaan mo yung par value para mas maging affordable yung shares of stock sa tao. Pero kung sa tingin mo, gusto mong gandahan yung image ng ng shares mo para maging mas pag in-evaluate mataas yung market value niya, you can decide on a split down. Kasi lalaki yung earnings per share, lalaki yung book value per share no shares of stock ng corporation. So it depends, ano ba yung need ng corporation for a split up or a split down para lang ma-push yung mapaganda yung image ng stock. Yun yung purpose ng split up and split down. I hope you learned from this. We still have one remaining topic, and God bless and good luck sa inyong lahat. I hope you continue studying from the beginning to the end kasi napaka-importante ng corporation. All the other topics that you're going to learn in the higher accounting will be about corporation.